Welcome back to another episode of Journey TV. Today we are diving into one of the most disruptive innovations in modern finance as we know it, asset tokenization. Imagine owning a fraction of a luxury penthouse in New York, a rare Picasso painting, a share or shares of a high-yield commercial property, all with just a few clicks on your phone. No brokers, no mountains of paperwork, and no waiting months for the transactions to clear. This is not a distant future. It's actually happening right now, thanks to blockchain technology. By converting real-world assets, known as RWAs, into digital tokens, tokenization is in fact redefining ownership as we know it, unlocking more liquidity, and breaking down barriers that have long kept high-value investments out of reach for everyday people. But what does this mean for investors, institutions, and the global economy? Tokenization is fundamentally changing how we buy, sell, and in fact trade assets, thus eliminating the inefficiencies of traditional markets. Whether it's real estate, fine art, or even commodities, intellectual property, blockchain is revolutionizing access to wealth-generating assets. And with major financial players, governments, and tech giants finally exploring this space, we are only scratching the surface of what is possible. If you thought crypto changed finance, you wait until you see what happens when trillions of dollars in real-world assets move on-chain. In this video, we will break down everything that you need to know about asset tokenization, how it works, why it's disrupting traditional markets, and what the future holds. From real estate to DeFi integrations, regulatory challenges, and beyond, we are covering it all. If you want to stay ahead of the curve in the rapidly evolving world of blockchain and digital finance, this is the one video you do not want to miss. Let's dive in. Asset tokenization is revolutionizing the way that we perceive ownership and investment in the digital age. At its core, tokenization involves converting rights to an asset into a digital token on a blockchain. This process isn't limited to physical assets like real estate or art. It in fact extends to intangible assets such as stocks or bonds, just to name a few. By representing these assets as digital tokens, we enable fractional ownership, allowing a broader range of investors to finally participate in markets that were previously inaccessible. The democratization of investment opportunities is a significant shift from traditional financial systems, where high entry barriers, they often excluded many potential investors. The mechanics of tokenization are rooted in blockchain technology. Blockchains are decentralized ledgers that record transactions across a network of computers known as nodes, thus ensuring transparency and security. When an asset is tokenized, its ownership details are then encoded into a digital token, which can then be easily transferred or traded on blockchain platforms. This is not only something that simplifies the transfer process, but also reduces the need for intermediaries, thereby lowering transaction costs. Moreover, the immutable nature of blockchain ensures that once a transaction is recorded, it cannot be altered, providing a high level of trust and security for investors. One of the most compelling advantages of asset tokenization is the enhancement of liquidity. Traditional assets like real estate are often illiquid, meaning they cannot be quickly sold or exchanged for cash without a substantial loss in value. Tokenization, it changes everything. It addresses this issue by allowing these assets to be divided into smaller, more manageable units that can then be easily traded on secondary markets. This increased liquidity opens up new avenues for portfolio diversification. And do not forget risk management. As investors, we can now buy and sell fractions of assets with relative ease. As noted by Chainalysis, turning these assets into digital tokens, it makes them more easily divisible, allowing for fractional ownership that enables more people to invest, which can in turn make the markets for those assets more liquid. In summary, asset tokenization leverages blockchain technology to transform the ownership and transfer of assets, making them more accessible, secure, and liquid. This paradigm shift holds the potential to democratize investment opportunities and reshape the future of finance as we know it. How is tokenization disrupting real estate? Well, for starters, real estate has long been one of the most lucrative asset classes, but its accessibility is an entirely different question. Real estate's accessibility has been largely limited to institutional investors and high net worth individuals due to the significant capital requirements and illiquid nature of the market. Tokenization, on the other hand, it's changing that by breaking down real estate into digital shares, allowing investors to own fractions of properties rather than committing to full ownership. Imagine being able to invest in a luxury penthouse in New York, or maybe a commercial building in London without needing millions of dollars up front. By fractionalizing real estate into blockchain-based tokens, tokenization significantly lowers the barriers to entry, thus enabling a broader audience to participate in high-value real estate markets. For property owners, wait for it. This model also offers a new way to raise capital by selling portions of your holdings without relinquishing full control, making real estate investment more flexible than ever before. One of the most significant advantages of tokenized real estate is liquidity. Traditional property transactions can take months or even years to finalize, often requiring extensive and expensive paperwork, negotiations, and regulatory approvals. With tokenization, real estate assets can be traded on blockchain-powered secondary markets in a matter of seconds, similar to stocks or cryptocurrencies. This newfound liquidity allows investors to both buy and sell property shares with minimal friction, providing them with greater flexibility and reducing the risks associated with long-term capital lockup. Additionally, because blockchain transactions remove the need for brokers, banks, and other intermediaries, tokenization dramatically reduces transaction costs, thus making real estate investing more cost-effective and efficient. This is a fundamental shift in how property markets operate as a whole, offering a glimpse into a future where real estate transactions are as seamless as trading on a stock exchange. Maybe you have questions on security and automation that further enhances the appeal of tokenized real estate. Well, smart contracts, they can be programmed to handle everything from rental income distribution to maintenance fees and property tax payments, ensuring that investors receive their earnings automatically and without the need for manual oversight. For instance, a real estate investment platform could utilize a smart contract to then distribute monthly rental income proportionally to token holders, eliminating the need for landlords or property managers to manually process any payments. Moreover, blockchain's decentralized nature ensures that ownership records are immutable and tamper-proof, reducing the risks of fraud, title disputes, and unauthorized transfers. As real estate developers, financial institutions, and even governments continue to explore tokenization, we are finally witnessing the early stages of what could be the biggest transformation in property investment in decades. What is the role of blockchain and smart contracts? Well, at the core of asset tokenization lies blockchain technology, which is a revolutionary system that ensures transparency, security, and efficiency in the investment process. Unlike traditional financial systems that unfortunately rely on centralized institutions such as banks, brokers, and legal intermediaries that sometimes take forever, cost a crazy amount of money, blockchain operates on a decentralized ledger, meaning that every transaction is publicly recorded, immutable, and easily auditable. This removes the risk of data manipulation, fraud, or human error, making ownership records more secure and much more trustworthy. Additionally, because blockchain networks are globally accessible, they enable investors from different countries to seamlessly participate in tokenized asset markets without the bureaucratic roadblocks of traditional cross-border investments. This not only democratizes access to high-value assets, but it also paves the way for a more inclusive and efficient global financial system. A key component of blockchain-based tokenization is smart contracts, self-executing agreements that automatically enforce the terms of a transaction without requiring intermediaries. These programmable contracts can handle everything from transferring ownership rights to distributing earnings from real estate or dividend-paying assets. For example, in tokenized real estate, smart contracts can in fact ensure that rental income is automatically distributed to token holders based on their stake, eliminating the need for property managers or financial institutions to manually process payments. Sounds fantastic. Additionally, smart contracts can also automate compliance processes, such as know your customer and anti-money laundering checks, ensuring that only verified investors participate in transactions. By eliminating the human error, reducing administrative overhead, and increasing transparency, smart contracts make asset management more seamless and much more cost-effective. Beyond efficiency, blockchain and smart contracts tend to enhance security and trust, two critical factors in the financial world. Traditional investment models rely on centralized databases, which in fact are vulnerable to hacking, data breaches, and even fraudulent alterations. In contrast, blockchain's decentralized nature makes it virtually tamper-proof, as every transaction is recorded across multiple nodes in a network. This means that once an asset has been tokenized and recorded on the blockchain, well, its ownership history is permanent and cannot be be manipulated. Additionally, because blockchain operates as a single source of truth, it also eliminates disputes over ownership, fraudulent asset claims, and do not forget opaque record keeping. As more industries continue to adopt blockchain technology for asset tokenization, we are in fact finally moving toward a future where financial transactions are faster, more transparent, and much more secure than ever before. So maybe you're worrying about the regulatory challenges and/or the market adoption as a whole. While asset tokenization offers game-changing benefits, regulatory uncertainty, on the other hand, it remains one of the biggest hurdles to widespread adoption. Financial authorities across the globe are still grappling with how to actually classify and oversee tokenized assets. Are they securities? Are they commodities? Maybe they're a completely new asset class. The answer varies depending on the jurisdiction, thus creating an incredibly complex and very fragmented legal landscape for both investors and tokenization platforms. In the United States, for example, the Securities and Exchange Commission, known as the SEC, has made it clear that most tokenized assets fall under securities laws, subjecting them to strict compliance measures. Meanwhile, other jurisdictions such as Switzerland, Singapore, and the United Arab Emirates, just to name a few, have in fact introduced clearer regulatory frameworks that encourage innovation while maintaining investor protection. This patchwork of regulations poses challenges for token issuers and platforms alike, who must navigate different rules simply depending on where their investors are located. Despite these regulatory complexities, the momentum is steadily building. Countries that have established clear guidelines are already seeing an influx of blockchain-based real estate platforms, investment funds, and asset-backed tokenization projects. For instance, Switzerland's Financial Market Authority, known as FINMA, has created a legal framework for digital securities, paving the way for compliant tokenized financial products. A good example would be Singapore. Singapore has positioned itself as a global leader in blockchain regulation, attracting institutional players looking to explore tokenization in a legally sound environment. In the private sector, on the other hand, major financial institutions, including BlackRock JPMorgan and Goldman Sachs, just to name a few, are finally experimenting with tokenized funds and blockchain-based settlement systems. Even centralized banks are exploring tokenization through CBDCs, more commonly known as central bank digital currencies, which in fact could eventually integrate with tokenized financial markets. These developments indicate that regulatory clarity is slowly but surely improving, setting the stage for broader adoption. That said, widespread adoption will require ongoing collaboration between blockchain innovators, policymakers, and do not forget those traditional financial institutions. More standardized regulatory frameworks will in fact need to emerge to provide clarity and foster investor confidence. In the near future, we may see regulated security token exchanges, where investors may be able to trade tokenized assets with the same level of legal oversight as traditional stock markets. Governments may also begin leveraging blockchain for land registries, bond issuance, and public asset management, further legitimizing tokenization as a mainstream financial tool. This transition, it won't be happening overnight, but with increasing demand for efficiency, liquidity, and of course, global investment opportunities, the long-term trajectory of asset tokenization looks incredibly promising. We're not just witnessing a technological upgrade, we are in fact watching the foundations of global finance being rewritten in real time. As blockchain technology matures and regulatory clarity continues to improve, asset tokenization is poised to redefine global finance as we know it. Imagine a future where virtually any valuable asset, real estate, stocks, fine art, or even intellectual property all exist in a fully digital tokenized form, thus allowing for seamless 24/7 trading with instant settlement. No more waiting for days for transactions to clear, dealing with middlemen, or navigating complex legal processes. Tokenization, it could also lead to new financial models, such as decentralized real estate investment funds known as REITs, or tokenized lending markets, where investors can in fact utilize their digital assets as collateral for loans. These innovations would make investing more dynamic, more flexible, and much more inclusive by enabling individuals to participate in markets that were unfortunately once restricted to institutional players. A major driver of this transformation is the integration of tokenized assets with DeFi. Imagine being able to stake your tokenized real estate to earn yield, use your art-backed tokens as collateral for a loan, or participate in global real estate markets directly from your smartphone. With DeFi protocols, investors could access liquidity pools and lending markets without relying on banks, effectively bypassing traditional financial institutions. Additionally, the rise of central bank digital currencies, known as CBDCs and stablecoins, could in fact further bridge the gap between traditional finance and blockchain-based investments, making it easier to convert between fiat and tokenized assets. As more financial products become more interoperable with blockchain, we're looking at a future where traditional finance and DeFi seamlessly merge into a single, efficient ecosystem. Ultimately, asset tokenization continues to represent a fundamental shift in how we perceive and interact with value. The days of illiquid, inaccessible, and paperwork-heavy investments are coming to an end. With blockchain adoption accelerating, more industries will embrace tokenization, creating an interconnected digital economy where assets are thriving, more liquid, more transparent, and more secure than ever before. Whether you're a retail investor, a real estate developer, or an institutional player, understanding and positioning yourself in this space early could be key to capitalizing on the financial revolution that's ahead. The question is no longer if the transformation will happen, but in fact, how fast it will shape the global financial landscape as we know it. Asset tokenization isn't just another blockchain trend. It is in fact a paradigm shift in how we invest, trade, and store value. By breaking down these barriers to entry, increasing liquidity, and automating processes through smart contracts, tokenization is finally making asset ownership more efficient and accessible than ever before. And while regulatory hurdles remain, the momentum behind this movement is undeniable. Governments, financial institutions, and tech giants are already laying the groundwork for a tokenized economy, signaling that this transformation isn't just a matter of if, but rather when. As more industries embrace blockchain technology and financial institutions move forward, digitizing assets, we are finally witnessing the early stages of a revolution that could redefine global finance as we know it. The real question is, how fast will mass adoption take place? We're already seeing governments exploring blockchain-based land registries, real estate firms tokenizing properties, and DeFi platforms integrating tokenized assets into lending and trading markets. As infrastructure continues to improve and regulations become clearer than ever, the opportunities in this space will begin to expand exponentially. For the early adopters, whether individuals, businesses, or institutions, stand to gain the most from this shift as they position themselves at the forefront of a new financial era. The ability to fractionalize ownership, unlock liquidity, and access global markets from anywhere in the world with ease could completely alter the investment landscape, bringing wealth-generating opportunities to a far broader audience. If you enjoyed this deep dive into asset tokenization, please do not forget to like, subscribe, and hit that notification bell so you never miss an update on the latest trends in blockchain, crypto, and digital finance. And we do want to hear from you. Do you think tokenization is the future of investing? Or maybe there are still too many hurdles? Please drop your comments below, and thanks again for watching. We will see you in the next one.